Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, February 16th, 2011. A wild trading day here on Wall Street today, folks. We're going to discuss it. There's a lot of big things that we need to go over to get it through to the point of understanding what it's doing, because there are some major events going on, major switches in market activity, and this is again coinciding with options expiration, which is somewhat on the normal side in that respect, but nonetheless a very intricate market in the making. Now, what are we talking about? Well, the market gaps up today into this double top from a couple days ago. This was the 52-week high. After pausing a couple candles, you can see the market did break higher. Now, this again took out the 52-week highs and sent us on a pace to the 134 even number. 134 we discussed in the chat would be resistance, and again, on a pierce of it by 1 penny, the market starts to collapse back down here. Now, as the market collapses, this is where it really becomes key. The dollar started to fall very, very quickly, and the market started to collapse. Now, many of you were going to say, well, but for the last couple of years, every time the market, would drop, it's because the dollar was going up, not down. And here we have the dollar going down, and the market's going with the dollar to the downside. What's going on here? And then all of a sudden, as the dollar bottoms down here, and here's the dollar chart, guys, take a look at this. As this dollar bottoms down here and the dollar starts to bounce, so does the market. The market starts to bounce up as well. Now, again, what's the reasoning behind what is going on? I'm going to surmise a couple little analysis points here. Number one, now the market is beginning to think a stronger dollar is better for the overall markets, for Wall Street. Why? Well, think about this, folks. If the dollar is getting weaker based on what we saw from the PPI this morning, the Producer Price Index, if the dollar is getting weaker, it's increasing inflationary pressures. The more the inflationary pressures increase, the less profits will be for companies. All right, remember, as their costs go up, because remember, if I build a widget and I need some metal, some plastic, those all are key commodities that I put together to create that widget. That means my costs are going up. That means my profit margin is dropping. And again, I can pass it along to the consumer or I can eat that cost. Either way, it's not a good thing. In addition, think about this, folks. If the dollar continues to fall and inflationary pressures continue to go up, now the Federal Reserve is going to have to halt their QE2, and even if they finish up their QE2, they're going to have to not do QE3, and the drug, which again has been QE, quantitative easing, going into the vein of the markets, has to halt now. So that's another negative. So all of a sudden, a weak dollar, which is increasing inflationary pressures, is not necessarily the best thing for the market. And it looks like we're seeing a little bit of a switch here. Now, again, we have to watch past options next week to see if this really plays out. But that is what it's looking like right now, folks. And again, interestingly enough, the dollar's falling again here. And we can go back to the UUP chart and look at the markets. They're starting to downtick. Here's the dollar falling back towards the lows of the day. And look at the spiders again. Granted, the volume's much lighter this afternoon, so it's not having as great of an impact. But the markets are definitely not going up at this point. In fact, they've stalled out and started to sell off. So again, a little switch in character here, which has to be recognized. We're the first ones recognizing this, folks. And again, this is key. You have to be on the cutting edge of the market. Now, if you want to get in depth, if you want to get the trades, if you want to get swing trades, if you want to get good analysis, join the Research Center. Take a free trial today. You can go to In the Money Stocks and take that free trial by clicking on the free trial banner all over the website. All right, and that's what we recommend you doing. But nonetheless, this is big because, again, this collapse in the dollar, which came down all the way to the 50 moving average. By the way, look at the bounce off that 50, which if you're a technical trader was a beautiful level. But again, that drop in the markets coincided beautifully with this drop here on the UUP. As the UUP, which is the dollar ETF, bottomed right here, that was exactly on the 50 moving average of the SPY right here, and then the bounce came in and we lifted off. So again, the market's now all of a sudden viewing a weak dollar as not the best thing out there, because again, it's going to halt the Fed from doing more quantitative easing, which is like a drug addict wanting more drugs. The QE2 is a drug to the markets. And again, it digs into corporate profits, margins, because people, when these companies build these products, they're using metals, they're using plastics, and oil goes into plastic. I mean, all these different things. Now costs are going up, corporate profits are going to stall out here. All right, so again, not such a great thing. And again, the Federal Reserve is doing their best to keep the markets propped up. POMO is still going to do their best to do it as well. You can see the size of the bounce that we got. Markets almost had a major breakdown here. It was almost a major breakdown. Look at the size of that candle. But again, they were saved off the 50. Volume again is now super light down here, and that's keeping these markets in check. Let's again take a look here at the GLD. GLD's really been chopping all day, which makes sense. You know, as the dollar collapses, gold goes up. Then the dollar bounced a little bit, gold came back in. Now again, we're seeing the dollar pulling back a little bit, and gold starting to get a little bit of a bid these last few candles on the green side. All right, so again, fun, interesting action here. Plenty of trades in the intraday stock chat. Again, I had a Wells Fargo, a JP Morgan trade. I called the exact top on JP Morgan today, folks. Take a look at this. Right here, $48.30, which is the pivot top, by the way, topping tail right there. Take a look at your daily chart. If I zoom out on your daily chart, take a look at the pivot top going back to 2010's highs. Perfect. I gave that to the research center via the Pro Trader watch list. I gave it to the chat room. That was a shorting opportunity. It was good for at least 30 to 40 cents on the downside. I also like it as a swing trade to the downside as well. Beautiful little level right there. And again, just another major trade here to go along in the arsenal of the pro traders, the pro swing traders and investors at inthemoneystocks.com, the biggest growing public euphoric state of investing and profiting out there in the markets right now. You want to join up, and again, just take the free trial. You'll see what it's all about. All right, Goldman Sachs today. Let's touch base on Goldman. Goldman Sachs is hovering up a little bit, but you can see the major roll over there. Wells Fargo is getting hammered. Wells Fargo getting hammered. But again, guys, guess what? The low of the day, take a look at this. Take a look right down here. Low of the day, pivot right in this range. There it is, right here. Beautiful. And again, believe it or not, we had a scalp earlier today, which was right here as well, off this pivot double bottom. The levels continue to work. This was another one of my scalp trades today that I called out in the intraday stock chat. They're there for the taking. You just got to join and take advantage of it. All right, again, great bounce on Wells Fargo, but Wells Fargo is still getting hit today, down 50 cents. Bank of America, quickly touch on that, is up 4 cents, really not doing a whole lot on the chart here. You can see it's been choppy, just like the market. As the market bounced, so did Bank of America. Apple Computer has been one of the stronger stocks today. Yes, it collapsed back down, but it's risen right back up $3 and change. Amazon's been one of the weakest stocks, down $2.25. Beautiful drop on Amazon.com. So again, good to see Amazon coming in as we talked about it in the research center, and again, analyzed it beautifully here. If I zoom in on the daily chart, look at the beautiful double top here. Perfect double top just a couple days ago. Look at the stock coming off of that double top level. So that's what we're seeing again, folks, as we analyze the charts. Just a few little tidbits. Again, let's go back to the spiders and just focus in on the spiders here on the 10-minute. You can see the market again kind of coming down, but the volume's so light. Even with the dollar going back down, it doesn't look like you're having a major drop. If the dollar really collapses in the afternoon session, I'm sure it will have a bigger impact on the downside here. But again, this is a major, major possible thing. Now, again, it's Options X week, so we want to see if this lasts through Options X and into next week. If this continues to happen, where a weak dollar is negative for the markets, you have a major change in character because, again, in my opinion, the PPI number today was the big number. All right, the general PPI number came in at 0.9. That's with food and energy. That was expected to be high. What was not expected to be as high was the core, which is excluding food and energy, at 0.5. That's a big-time increase, and it shows inflation on the producer side. And again, we'll get PPI numbers, CPI numbers, which is Consumer Price Index, tomorrow. I don't think they'll be that high because it hasn't been passed through to the consumer. In addition, the CPI number is partially made up of housing prices, which are continuing to stay flat to negative, and therefore a big portion of that will keep that number down. But either way, folks, the inflation bug is coming. It's just a matter of when. Alrighty, join the research center, join the chat room, join inthemoneystocks.com. Let's start making more profits, folks. Take care.